Welcome to the Commercial Real Estate Show, your source for forecast analysis and what to expect moving forward. I'm Michael Bull. Thanks for being with us. Today we're going to talk about industrial real estate, warehouses, logistics. We're going to talk about manufacturing. We're going to look at what happened in 2016, what to expect moving forward in 2017 and beyond. We're going to talk about some of the factors impacting industrial real estate, talk about some opportunities that you might find in industrial real estate around the country. Please welcome my first guest is Barbara Denham. Barbara is senior economist with REIS. Barbara, thanks for joining us.
My pleasure.
Well, Barbara, how did 2016 shape up in the U.S. industrial market?
2016 was a great year for warehouse distribution and flex R&D. Net absorption was close to 100 million square feet, which is a slightly less than it was in 2015, but very, very strong. Vacancy rate overall declined from 10.8% to 10.4%. So of all the property types, I have to say the one that did the best in 2016 was the warehouse distribution flex R&D space.
And what did you see for rents in 2016? What was the trend there for rental rates?
Rent growth was pretty strong. In general, industrial rents don't go up that rapidly, but last year rent growth was 2.1%, but that includes 0.7% just in the fourth quarter. So there was this big surge at the end of the year.
Okay, so the sector in industrial that improved the best was distribution and warehouse. Was that from e-commerce?
Yes, there was a big impact on e-commerce. It's definitely affecting the industrial sector. And we're seeing it across the country. Every single industrial market that we track showed positive occupancy and positive rent growth. So you're seeing the e-commerce impact everywhere.
And where are you seeing the markets around the country that are really getting some great growth?
I would say the best markets are, the San Bernardino in California, San Jose, Atlanta, Chicago, and Houston are still doing well. Even Kansas City and Nashville are doing very well. So, it really varies. Generally, the general rule is the larger the market, the better they did. Just because of the accommodation and the preference of industrial companies and shippers to be in these locations.
Right.
So Florida did very well. Orlando and Jacksonville and Tampa did very well.
Good. What about 2017 and moving forward, Barbara? What do you expect?
Our forecasts are very bullish for industrial. We see another 100 million square feet of net absorption coming ahead in 2017. We see construction in the same ballpark. Last year there was over 70 million square feet, 78 million square feet of construction. We see a very similar pattern next year, about 78 million as well. And we see net absorption of over 100 million. So we see the vacancy rate declining to about 10%. Rent growth likely we see accelerating a bit to 2.4% next year.
Okay. And did your forecast change any, Barbara, with the election results? I think the election results surprised a lot of people.
Mm-hmm.
We've seen the stock market doing extremely well. We've heard maybe some rhetoric and some of what Trump is going to do. Forecast change any for industrial?
Right now, we have not changed our forecast based on the election impact. A lot could change with the industrial market. If there is a trade war, things could really have an impact. But we don't think that impact would hit for a number of years, and we still have not determined if it would be positive or negative whatsoever. So, no, we haven't changed the forecast. They're still assuming positive employment growth, continued growth in e-commerce, and better logistics overall.
Okay. So what is the number one factor that you see impacting industrial real estate?
Probably this e-commerce. It's been growing year after year after year. Amazon has just been on a tear, and they seem to, besides doing their own businesses, they offer third-party fulfillment centers, so they're handling the shipping and the warehousing of other companies as well. So you see tremendous employment growth in some of these markets where Amazon is building a huge fulfillment center, and we don't see that slowing down anytime in the next 2 to 3 years.
Okay, so the growth in employment impacts industrial real estate because these people shop and then their goods have to be warehoused and delivered? Is that how that rolls?
Yeah, I mean, generally speaking, the better the economy is doing, the more people are shopping and consumption goes up. So that's there's definitely a positive correlation there. But I was looking also at the the warehouse and distribution employment itself, and I'm finding that job growth in that one industry has been growing at a faster pace than any other industry in the higher than manufacturing or business or healthcare.
Okay, we're talking with Barbara Denham, with senior economist with REIS, about industrial real estate. So, Barbara, what do you guys think about onshoring, about some of these companies bringing back their manufacturing to the U.S.? Have you seen much of that in the last year and the last couple of years, and what do you expect moving forward?
We have not seen any impact of that on our warehouse and distribution space. We've seen more just the Panamex impact has certainly had an impact on the Florida markets and the South Atlantic markets like Charleston. So there's somewhat of an impact from the expansion of the Panama Canal. But, I read a lot about the onshoring and bringing back manufacturing jobs here, but I don't think that's going to have a huge, significant impact on the warehouse distribution in industry, mainly because it's related to trade. And so even if the manufacturing moves back here, it's not going to be a huge jump in that type of business, and they're still going to need the warehousing space.
Right. So industrial, it's been a hot investment market. So what were the trends you saw for cap rates in industrial around the U.S. last year?
Cap rates definitely declined. It's a niche market, so you don't see a lot of investors getting into the warehouse and distribution as an investment as you do other things, because a lot of investment investors in general need to know more about what they're doing. So there's people that will take risks on the apartment market, but not the office market. And rent growth is positive, and it's healthy for industrial, but it's not like the surges you're seeing in the apartment market or can sometimes see in the office market. So cap rates have been falling, and it's a very solid asset class, but it's not been tremendously. It's not fallen at a really sharp rate. It's just steadily declining.
What are some sample cap rates that you've seen?
Generally speaking, we're seeing 6 to 7%. But again, we're not seeing much drop or increase, and a lot of it is transaction dependent. So you won't see even if you see volatility in the trend, it's because a very high end property traded one quarter and a number of low end properties traded the next. So it's hard to really get a sense of the cap rates when it's very driven by whatever transactions traded that quarter.
Right. Good point. Another factor, I guess, the impact cap rates moving forward will be rising interest rates. So what is your expectation for cap rates for industrial real estate moving forward, considering your analysis of forecasts of how industrial is going to perform, and then your thoughts on how interest rates may adjust in the next year or two?
Yeah, well, we're taking a very cautious outlook on things like cap rate forecast, because yes, if interest rates go up, that means financing goes up, which means the purchasing price of a building or a property will go down, and that means the denominator is lower, so cap rates will go up. However, if it is truly inflationary and the economy is growing rapidly, that means that rents will go up and net operating income will go up, which is in the numerator. So it's not this kind of knee-jerk reaction that as soon as interest rates go up, cap rates go up. It's a very mixed bag. If interest rates go up, you might see more transactions. You might see more transactions in riskier properties, and that might raise cap rates, or you might see more transactions in high-end properties, and that would lower cap rates. So we're not seeing a tremendous we can't say for sure that higher interest rates will translate into higher cap rates. What we do foresee, like most people, that interest rates will go up.
Yeah. So I guess what you're saying is that maybe flat cap rates moving forward for industrial real estate. If interest rates rise and income rises, it's a favorite asset class. Well, we're going to take a short break, and we'll be right back. We'll talk more about the industrial real estate market. I'm Michael Bull. This is the Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.